All right, so the DSCR loans are super easy. So DSCR, debt service coverage ratio, right? And so what you're trying to figure out is you want to figure out what the rent roll is, or you get I think it's called a 1007 when the appraiser does it,
Okay.
right? And so if the appraiser is going to figure out what the rent schedule is, you're going to be super screwed. With the DSCR loan, it's basically how much does the house rent for? So if the house rents for $4,000 and your mortgage payment is $4,000, so you're at a 1-to-1 ratio, right?
Okay.
So that's awesome. So every DSCR loan is going to take that. Typically, you're going to get pricing at like 20% down, and it's going to be actually pretty decent pricing. But right now, it's rare that you're going to have
The 1-to-1.
the 1-to-1. So when you're looking at a purchase, you're trying to figure out like what's the most. So then what other lenders will do is they'll say, okay, so we're going to do 0.75. If you have a $4,000 payment divided by 0.75%, so if you take the rent schedule, $4,000 divided by 0.75, that means that your mortgage payment cannot exceed $5,300. And so there's going to be a pricing adjustment for the 0.75, and then they're probably going to want. But even then, like how many houses are actually $5,300? What we figured out is Champions, they do no ratio, yeah.
So it doesn't matter what the rent is?
It doesn't matter. So does Home Express. These are 75% LTV caps. So if you're at a 1-to-1, you're probably in the lower sevens. If you're at a 0.75, you're probably closer to 8. So I mean, like conventional rates, right, where are those? So it's not that much worse. They're all borrower paid. There are some lenders that are giving you yield spread on these. We don't have a lender right now that's giving us yield spread.
So all of them are?
So all of them are borrower paid. You can charge 2 to 5 points on these because they're not subject to trade.
Mm-hmm.
These are business purpose loans, so there's no CD timing, there's no right to rescission.
Even for a cash out refi, there's no appraisal? They'll do a rent?
No, so you still need an appraisal. Because
You still need the appraisal?
You still have an LTV, right?
Right. Okay, so you still do the appraisal, but for the rent, we either
Yeah.
do the rent roll or this?
Yeah, so if you have a lease agreement, right, then you can go off the lease agreement, and then you gotta show bank statements showing that that's how much they're collecting.
Okay.
But like if, let's just say the house rents for $4,000 and you have a lease agreement for 6,
Mhm.
they're gonna be like, nah, dude.
So then they'll
So
order
they'll look
that?
at this and they'll go like 125% of it. So on a cash out refi, like for Dimitri,
Yeah.
his house is worth 1.5.
Now, would you use a DSCR calculator? Well, I mean, until I get used to. Is that something that basically you're?
I've never even seen that.
Okay,
I don't-
because it kind of gives you the score, like when you go in there. like,
Yeah,
the
so okay,
score.
so right
that's
there,
why.
like the DSCR score is what?
Oh, I didn't finish it. I just started doing it. I
Well,
was
it's
gonna ask you.
already at 0.6.
Right.
So then so right away, you know, like 75% LTV, so
Mhm.
where's that going?
Right.
It's going to Champions.
Champions, yeah.
Sometimes on these type of loans, it's about making it easier than like the rate.
So what about documentation?
Yeah, so you have to own a primary residence,
Okay.
and that's it. Now, if they don't have a primary residence, you can get an exception.
Okay.
One of the things to note on these DSCRs is the prepayments are brutal.
Right.
Most lenders are going to try to hit you with a 5-year prepay,
Okay.
but it's better to take the higher rate and just do a 1-year or a 2-year. So for these
Yeah.
are super easy. So you just need bank statements. That's the most key component. For him, he doesn't have a mortgage, so HOI. And then you'll pull the property tax bill.
Yep, I got all that.
Okay. And then,
The
lease
operator, he has the
agreement.
LLC.
Yep.
Or not LLC, it's a corporation.
okay, so just get the statement of information.
So the bank statement, do they have to have reserves? Is that why they're asking?
Yeah, they do need to have reserves. But this is a cash out, so you can use cash out as reserves.
Oh, okay.
The way I work these is I go, what's this property renting for? It's renting for $5,000. Okay, so I'll call Mario, be like, Mario, what's the rate on a no ratio?
And then for closing costs, they're just regular closing costs?
Yeah,
just
regular.
adding in the points?
Yeah, just adding 2 points.
Okay. Next question. Do they require them to have impounds on this?
I don't think so. Hey, Mario, I got you on speaker.
Okay,
Hi, Mario.
So we got a DSCR. We're trying to do no ratio.
all right, so this is a DSCR,
Yeah. Teresa has $1 million purchase for you right now.
but this one here is a purchase, right?
No, it's a
No,
cash out
cash.
refi.
Cash out refi, okay, and so I'm gonna do the no ratio. And what's the FICO?
800.
Okay, 800, and the LTV that you need,
Go with 70.
and the loan amount?
1 million.
Including
Damn,
closing
dude, you're
costs.
not messing around. Okay, so 800 FICO, 70% LTV, $1 million loan, a single family, correct?
Single fam, yeah.
I'm gonna put it with a 1-year prepay. Does he have any disabilities?
He's old.
Is he like, The attestation is like if he's like on medicine or if he's limited for movement. We send out an attestation form, and if he signs and he checks a box, then who are we to judge, right?
Okay, then
But-
yeah, let's just say he takes baby aspirin.
Okay. Okay. The best case scenario would be 8.75. This is the no ratio.
Go the
Additions to that.
Go
it'll
the other
be
way. Go to like 8375. What's my cost on that?
8.375 is 0.625.
Can you screenshot that and send it to me?
Yeah, I'll send you all the options. This is with 1 year prepay.
Give me a 2-year prepay as well if you can. And then, oh yeah, do they have to collect impounds?
On the lower LTVs, I think if it's under 70, you don't have to do impounds. Let me see. Hold on. Let me just make sure. Okay. Escrows for taxes and insurance are required on all loans with LTVs greater than 80. Otherwise specify the applicable law. No. So your LTV is 70. You don't need to have impounds.
Is it a pricing hit if we waive impounds?
It's a quarter. But you're not at 80 though.
That's
So let me look at the pricing. Oh, it goes up by 10 bips.
10 bips? Okay.
I'll send it over to you right now.
Cool, bro. This guy is an investor. He does flips, but this is a flip that he wants to hold. So he
Yeah.
doesn't have a property that he owns right now.
How long? What was the last property that he owned?
Find out.
We'll find out for you. So he
Yeah,
has a
'cause I mean,
history of owning properties.
They're probably gonna ask some sort of documentation that he's own property. I got Barbie on the other line, dude.
Okay, take it.
I'm
See
gonna
it.
send this over. Okay, bye.
All right, later, bye.
Okay,
See?
seems pretty simple. So the
Super
most
easy.
ones used are DS Champions.
Yeah, I mean, Champions has just been such a plug. And then the other one I want to show you, because I'm pushing this a lot, is the P&L loans. So self-employed 2 years, LLC. You'll need same thing, operating agreement, statement of info. They need an online presence. So like Alan, who I'm closing, he didn't have an online presence. So I was like, dude, just go create a website.
Oh.
He did. So there's
They
that.
don't care how long, as long as he's.
No, it's just you need an online presence. So the way that this works is, rather than looking at tax returns, right, we have a 12-month, and this is key, it's a rolling 12 months for a profit and loss.
Oh, okay.
So I don't need
No tax
2020.
returns. Right.
Yeah, so no tax returns. So right now, I would
December
need-
to December.
yeah. Or if I'm doing it in May, then I need it from
May.
May to May. And so they'll create their P&L, and then we'll send it over to a tax accountant to verify it. So they'll look at the P&L, they'll ask the client for some bank statements, and then so they'll verify that that's all accurate, and then the tax accountant will create a P&L for us. And then usually it'll match, and so that's what we use for the income. So for example, Alan on his tax returns, he's probably showing like a negative 120,000 in income. On his P&L, he showed 700K in profit,
Mhm.
right, after all expenses. And so the P&L that the tax accountant got us matched, and so that's what we submitted. So then his income was 700
So he could actually.
divided by 12.
Okay.
And so he's closing on $1 million property
Oh, wow.
with 15% down.
Okay.
The rate is 8.2 with a 1 point buy down.
And who does the P&L?
Change. And I love
That's-
this product. But that's super good for like anything, because you can do P&Ls on investment properties, and then it's not like DSCR because there's no ratio involved.
Mhm.
It's just the P&L. The P&L is not like super invasive, kind of just really like, hey, what are you actually making? Oh, on that P&L, you need 3 months reserves, and it's really weird, you got to do 15.1% down.
15.1%
Yeah.
down.
And that's really what we're pushing, that DSCR P&Ls. Yeah, I mean, that's pretty much both of those. That makes sense?
Yeah.
Okay. All right. And then champion stated income,
And they do stated too?
yeah,
Okay.
down's easier. 20% down, 720 FICO, 9 months reserves. That's it.
Wow. Okay. All right. Cool.
That's
Thank
it.
you.